Hey guys, welcome back. Okay, so today we have 3 cheap but very high potential SPAC stock that you may want to buy now. Full disclosure, I do own one of them and I would look to buy the other 2. Again, this is my opinion and not financial advice, so please do your own further research. Given that, let's get into it. So first, let's do a quick recap of the 4 key strategies for a profitable SPAC trade. We learned this in a previous video based on how hedge funds trade SPACs. If you had not watched it, please watch the detailed video explanation on SPAC strategies above. Okay, so number 1, we will only buy SPAC stocks with reputable sponsors or great management. Why? Because there are so many SPAC nowadays, we need to find someone who is credible and can find good deals. Number 2, we want to buy in at the early IPO stage. This is what the hedge funds do. However, since we likely won't get in pre-IPO, but at least we can try to get in on the day of the IPO. Though even then, we must keep with step number 3, buy at or near redemption IPO price. Then step 4, we will sell at deal announcement. Thus, we will only look for SPACs that have not made a deal announcement yet. Though I will make an exception for this rule if the deal is good and the price has not moved too much. So the first SPAC stock we have now is Burgundy Technology, BTAQ. Full disclosure, I do own shares in this stock and I'm looking to buy more. This one is quite interesting and I've been hearing a lot of buzz about it lately. Burgundy raised $300 million in September and intends to focus on deals in Europe, Israel, and the US. Burgundy's chairman is Leo Apotheker. He is the former CEO of Hewlett Packard and was also a former senior executive at German enterprise software company SAP. Mr. Apotheker has years of experience and had led billions of dollars in acquisition deals at HP and SAP. Thus, he clearly has the experience, knowledge, and connections to find a good deal. Next, unfortunately, we are too late to buy in at the IPO price. Though looking at the current price of $10.41, it is not too far off the $10 IPO price. This leads us to step number 3, as we want to buy at or near the redemption price of $10. In looking at the technical charts, there was a recent increase in price in the last few days. As mentioned, there are more buzz about this stock lately. Maybe somebody knows something. In any case, here there seems to be resistance at around $10.65 and support seems to be around $10. Of course, we want to get in closer to $10, but it may not be possible if it keeps moving up like this. I'm surprised it traded below $10, but that happens sometimes, especially when there's not much coverage on the SPAC. In any case, at $10.41, it is a good entry point. As we know, our downside risk is limited to $10, but our upside potential can be anywhere from $15 to $20 depending on the deal. So the risk to reward ratio is very good. Next, step 4. There hasn't been any confirmed deal announcement yet, which is a good thing or else the price will have skyrocketed and we will no longer have an opportunity to buy the SPAC. However, there are rumors, speculations that BTAQ could merge with RE Automotive, Taboola, or eToro. RE Automotive actually is a very interesting Israeli startup that is developing next-generation electric platform made to be completely flat, scalable, and modular, in which customers will have full design freedom to create the broadest range of EV and autonomous vehicles for their current and future applications. As you know, the EV sector is super hot right now, so if this was the deal, the stock would see a huge pop. Next is Taboola, which is a web-based platform and advertising company that recommends and connects people to sites that may resonate with them. You will have likely seen their ads at the end of many popular articles you've read. Yes, you know, the ones that seems like clickbait. This company was also founded in Israel. Then we have eToro, which is an Israeli social trading and multi-asset brokerage company that focuses on providing financial and copy trading service. It is quite similar to Robinhood. This deal would also create a huge pop in the stock as Robinhood and similar apps are very popular right now. As you may have noticed, they are all Israeli companies. Burgundy stated that they are looking for companies in Israel. Several large Israeli companies also stated they may look to go public via a SPAC deal. Interestingly, Mr. Apotheker also graduated from the Hebrew University of Israel and likely has a lot of connections there. Hence, there is a good chance Burgundy makes a deal for one of these companies. Next, for SPAC number 2, we have GS Acquisition Holding Corp number 2, GSAH. So the sponsor for this SPAC is no other than Goldman Sachs itself. Most of you probably already know, but for those that don't, Goldman Sachs is the largest and probably the most reputable investment banker in the world. The network and alumni are the most powerful leaders and CEOs of many companies. In July, they created a SPAC and raised $700 million. They plan to look for opportunities in diverse industrial, healthcare, technology, media, and telecom sectors. With Goldman Sachs' full range of resources across a variety of industries and vast wealth of pipeline and connection, I'm confident they'll find a great deal. Moving to step number 2, unfortunately, we will not be able to buy at IPO anymore. However, it's still trading at a good price. In looking at the technical charts, we see that GSAH has a strong resistance at $11.20. It seems to be trending upwards with support at about $10.50 and the lowest support at $10. As we know, it won't likely fall to the $10 IPO redemption price. However, at $10.90, your downside risk is limited to $10 with upside potential at $15 plus. Hence, I will be looking to add a position here. Of course, don't buy all at once. Save some money to buy more if it drops lower to $10.50. Next, step 4, sell at deal announcements. There has been no deal announcement yet. However, since Goldman Sachs has such a powerful brand and vast resources of pipeline deals, I'm not worried at all. I'm sure they have many clients who don't want to do an IPO and may want to do a SPAC deal instead. I suspect this is the reason why Goldman Sachs created its own SPAC. Thus, I'm confident they will find a good deal soon. Next, we have Churchill Capital Corp, CCIV. In August, Churchill raised $1.8 billion, one of the largest next to Bill Ackman's PSTH. CCIV is led by Michael Klein, who is the founding partner at Klein & Company, which is a global strategic advisory firm. But he is more famous for being a rainmaker at Citigroup and bringing in billions of dollars for the company. Additionally, this is his 4th SPAC. 2 of his other SPAC has already completed deal. Hence, he has a lot of experience and connection in making big deals. Moving to step number 2. Unfortunately, we will not be able to buy at IPO anymore. However, it is currently trading at just $10.01. This is only 1 penny away from the IPO price. Thus, we should buy now. In looking at step 3 and at the technical charts, we see that CCIV has some resistance at $10.20, but more recently it seems to be trending upwards with support at $10 and even as low as $9.70. If it goes under $10, I will be buying a lot more. Here, if we buy it now at $10.01, our downside risk is only 1 penny and our upside is $15 plus. Thus, it is such a great buy now. Next, step 4, sell at deal announcement. There has been no deal announcement yet. However, recently, CCIV was linked as a finalist in the bidding for DirecTV being sold by AT&T for about $15 billion. AT&T eventually backed out as they wanted more for DirecTV. Though this is probably a good thing, as I don't think that would have been a good deal since we all know that consumers are all shifting to online streaming services. Overall, because the price is so low, there's literally zero risk. Hence, it is a great buy here. That's all for today. Happy trading, and please don't forget to subscribe.